Hey everyone, me Kevin here. So a lot of you might remember that I have been extremely bullish on Lucid from the SPAC merger on. I expressed my frustrations of Lucid having its momentum swing way up and then falling way down and potentially way overselling back to like $17 a share. And for probably 4 to 5 months, I was asked, Kevin, when is the stock ever going to go up? Am I just holding bags here? Thanks a lot, Kevin. What do I do? And I kept saying, folks, just wait until deliveries start, because once deliveries start, hype and momentum comes back. And folks, that's what we have right now. Deliveries have started, we have hype and momentum, and the stock has literally gone to the moon. It's up over 450% this year. It is way up, over $55 per share. And right now it feels like there's nothing holding it back because we're in the midst of an EV super cycle. But in this video, I want to talk about something that a lot of us have forgotten, because we last talked about this on March 2nd. Well, the EV market turned to crap in March, in April, in May, and barely started recovering in July. And so revisiting this piece of information here, I think is especially critical because of an announcement this week by some big Silicon Valley tech company, and this is bullish for Lucid. Now I'm going to talk about my price trajectory for Lucid in just a moment, but first, let's hit this clip here because this is really important. Right after I mentioned that you should check out the program on building your wealth, link down below, Stocks and Psychology of Money. Get all my buy, sell alerts. There's suggestions for you. There is a Black Friday coupon, and of course you can build your wealth through real estate investing, property management, YouTube videos, being an agent, property management, rental renovations, all of that. Link down below. Check those out. Okay, let's jump in over here. So this is going to look a little funny because you're going to have two Kevins here, but that's just the way it is. You got old Kevin and whatever this is right here. And let's go ahead and listen to about 15 seconds of this. Listen closely here to what Peter Rawlinson says.
All is connected with an Ethernet gigabit ring, super connected car, 2 terabytes of data onboard storage, super cloud connectivity. This is the perfect platform for any Silicon Valley big company to prove out its AD software, I think.
Okay, what is AD software? Autonomous driving software. What is a potential big Silicon Valley? Along with Peter Rawlinson's nudge, nudge, wink, wink that he did there. Just replay it if you missed that nudge, nudge, wink, wink. How about Apple? Folks, literally this week, Apple said, hey, we don't plan to have a full self-driving vehicle until 2025, but we might partner with another vehicle manufacturer beforehand. We might partner with another manufacturer between 2022 and 2023. Now, they didn't exactly say why, but Peter Rawlinson might have the answer here. Hey, we've got the perfect stack where you might be able to test out your AD, autonomous driving software, if you're a big Silicon Valley company. Come on, folks. It's either Google, it's Apple, maybe it's Qualcomm, but actually, I don't, or NVIDIA, but let me see, where's Qualcomm headquarters? Let's see oh, they're headquartered in San Diego. That's interesting. Did not know that. Ooh. So, but anyway, that's, in my opinion, pretty bullish. Doesn't really matter what company it is. It's very bullish for Lucid. By the way, NVIDIA is also headquartered above Santa Clara, so or above San Jose in Santa Clara. So I don't know that it really matters which of these it is. Maybe it's not even one of these, but you've got some pretty big options there, and that was a pretty clear nudge, nudge, wink, wink, in my opinion. So to me, that's pretty bullish on Lucid. Imagine if Lucid announced a partnership with Apple. This stock would just go haywire. It would absolutely go bonkers. No guarantees, total speculation, obviously, just putting pieces of the puzzle together here. But what do we know about price action here recently? And is this a stock that we want to potentially FOMO in now because the upside is way higher? Well, look, Lucid right now has a $90 billion valuation. It's somewhere around 1/11th the size of Tesla. And we've got, in my opinion, a few negative catalysts coming up that could potentially hurt the stock. Now, that does not mean I'm anti the stock. While there have been some frustrations with how deliveries are being processed at the company, I've been a big fan of the stock. Now, I traded a lot of my investment in the stock. I traded a lot with call options, and I traded a lot with sold puts. But more importantly, what we want to look at here is what do we actually think is going to happen upon negative catalysts. Let's talk about that by looking at the chart. So right now we're sitting at 55.21. This is a company that projected to deliver around 520 vehicles here in 2021, and then potentially take off in 2022. In fact, what I'll do is I'll pull up my spreadsheet where I compare Lucid and Rivian. Actually, I don't even know that I've revealed my Lucid spreadsheet before, so here's a treat for you. And I also talk about how I do my fundamental analysis and all that in Stocks and Psychology Money. Seriously, use that Black Friday coupon because the price is just going to go up from there. So initially, we were expecting to deliver 1,000 vehicles in 2021. We think that ramp's probably going to be closer to 520. So I think there's a big risk here. Downside, miss, risk. So I'm putting this here because this would be reported in January of 2022, right? If we're expecting a potential partnership announcement by a company like Apple or some other Silicon Valley tech company sometime in 2022, then there's a good chance you're going to have a really big negative catalyst for Lucid stock potentially in January. Now, they might kill it, but I don't think they will. I think that they're going to substantially miss on deliveries. It's very, very important that they started delivering because nobody actually thought they would begin delivering vehicles. I had faith that they would deliver vehicles. I also had faith the stock would go up once they started delivering vehicles. I did not think it was going to momentum move as much as it did. I will tell you that. And when it ran from like $22 to $30, I thought, okay, cool. This is the beginning of the move of vehicles being delivered, and that's it. No, it ended up almost doubling from there, right? Like $55. It's incredible. But anyway, I do believe that means right now we're really built not on fundamentals, we're built on fundamentals plus a lot of hype. And that hype can get hurt on a deliveries miss. So if we end up with a deliveries miss, and let's say, what if we only deliver 420 vehicles, right? And that's less than even the revised 520 expected for this year. That's not going to be as ideal because what people are going to do, in my opinion, potentially in the Q1 report, the earnings report, is they might take and extrapolate their production rate here, depending on what kind of guide Lucid gives. And if the guide, or which almost certainly will be the production rate, are less than that 20,000 vehicle target for 2022, which 20,000 vehicles, it's a little less than 2,000 per month, 1,666 vehicles. If they're on a slower pace than doing 1,600 vehicles per month, which we substantially expect them to be, I mean, think about it. If they're trying to get 500 out the rest of the year, starting in September when they first made that projection, that means September, October, November, December, in 4 months, they got about 100 vehicles out a month. They've got to somehow 16x their production realistically by Q2 at the latest of 2022. Otherwise, the stock market's going to look and go, whoa, wait a minute. You guys are ramping way too slowly. This is not good. I think that is a potential massive downside risk for Lucid. Now, don't get me wrong. I think there are a lot of really cool upsides for Lucid in the long term. A lot of Lucid, though, valuation-wise, is going to come down to that value per vehicle. We know Lucid is rushing to try to get to an under $80,000 vehicle. Let's say that they get to a $79,000 vehicle. They're selling their 130s, their 140,000 vehicles, 150, $169,000 vehicle, whatever. They're selling vehicles in the spectrum. Let's just go ahead and say the average by 2025 is 80,000. I still think this is very, very bullish here that they would get to an $80,000 average sale per vehicle. But let's say they do end up delivering 200,000 vehicles by then, if they pull that off. Throw in a little bit, just a little less than 3% for leases here. That would get us to about $16.4 billion of revenue. If they had a 25% expense margin, which is not as good as Tesla, but this would still be very, very good. In fact, I'm going to adjust this down and say that they have 80% in cost, which puts them a little bit closer to where NIO even sits today. So that means they're spending 80% of every dollar on the vehicle on actually producing the vehicle. And we throw some other things in here like interest, taxes, whatever. Now we divide by the amount of shares outstanding the company has, which the company has like twice as many shares outstanding as Rivian. It's worth noting that. And the price today is $80, let's say. Then at 100 times multiple in 2025 with these figures, Lucid would be worth $32 a share. At 100 times multiple in 2025. Well, wait a minute. It's like twice that right now. Exactly. So let's now adjust this a little bit so we don't sound like a big old bear. Let's go back to that 75% expense ratio, which means 25% gross profit margin. Let's now assume they bump their average vehicle revenue to $90,000 and they still deliver 200,000 vehicles by 2025. At 100 times future earnings, that puts them at about an $81 stock. So you could see how quickly the valuation can change based on that value per vehicle and their ramp rate. Everything about Lucid's valuation comes down to that ramp rate. If that ramp rate beats, Lucid stock will do very well. If that ramp rate misses, it will do very poorly during those misses until it catches back up to pace. So with that said, I personally believe the biggest and most challenging times for an automaker are your first years of ramping. And then when you start expanding to new factories, which we know there'll be a Saudi Arabia factory at some point here as well, once we get this Arizona facility to scale. So I don't want to sound like a Lucid bear by saying that. I think right now at $55, $57, whatever, it's kind of gone a little nuts, which is fine. The stock market does that. But as an investor in Lucid, if you're an investor in Lucid, I would just think to myself, is it potentially okay to take some profits, to sell some calls for Q1 or whatever? And if I get called out, oh well. If I end up selling, oh well. If it runs to $80, you're going to have to not feel bad about that in SOMO, right? But if we end up pulling back down to some of the support levels we have, which these are long-term support levels, not necessarily recent support levels. A lot of these levels were drawn way back on the hour candlesticks. But if we end up drawing back down to, say, 37, or we draw back down to where we have multiple different supports between 29 and 30, or worst case scenario, we go back to levels like the channel that we used to have, that 24 to 23 channel. If we go to any of these levels here, it's going to be a lot more attractive of a company to invest in. Because at $36, worst case scenario, if they only do 200,000 vehicles, hopefully they do at least that, at 80,000 with an 80% expense ratio by 2025, at least you're break even, you're not losing in 2025, right? And there's still that hopium that hopefully propels it. If you could get it down here, I feel like you start getting a margin of safety. Realistically, the real margin of safety is when you're around $23, $24 a share, because this is where you could really go dirty. If you go with 80,000 per vehicle, you go with an 80% expense, and we go with just a miss here. We go with 150,000 vehicles. We're going to get a little bit closer. See, look at that. Now you're at $21 per share. Now you're at much closer to that lower level, and you're really assuming some, in my opinion, worst case scenarios. I mean, if they can't in 1, 2, 3, 4 full years get to 150,000 vehicles, which is somewhere around 12,000 vehicles a month, 12 to 13,000 vehicles a month, that's bad. And there should be plenty of writing on the wall before then that the company is just totally not on track. But I don't know that Lucid's not going to be able to pull that off. I'm optimistic. And I also think you're going to want to be around for that potential Apple catalyst. It doesn't necessarily have to be Apple. It could also be NVIDIA or something else. I think it's interesting. And I think it's a reason to be bullish. I would not buy the stock at these values, though, because of this excitement. Because even that excitement will wane once the announcement is made. But anyway, these are just some thoughts to think about. If you like the way I think about stocks, do consider checking out the programs on Building Your Wealth link down below. Make sure you use that Black Friday coupon. And it does expire and the price goes up at 11:59 p.m. on Friday. So do it before you forget. I always know that feeling like, oh yeah, I'll do it before then. But then you forget and it's like, why didn't I just do it earlier? Now I missed it. Anyway, thank you so much for watching and we'll see you in the next one. And bye.